This is Debt Weapon. You open up your brokerage account and look at your portfolio. Right there, you probably see the SPDR S&P 500 Trust ETF, ticker symbol SPY. For decades, you've been told it's the absolute gold standard, the safest, most risk-free asset on the planet. But you've been sold an illusion. Hidden deep inside the legal fine print of our financial system is a dark secret that Wall Street desperately wants to ignore. Okay, let's dive into this and expose what's really holding up the machine. We are talking about $500 billion. Let that massive number sink in for a second. That is roughly 1% of the entire United States stock market, sitting in just one fund. This single asset is the cornerstone of millions of retirement accounts. It's the absolute bedrock of global institutional portfolios. It represents a staggering concentration of wealth. But here's the reality. This massive monolithic structure is actually built on a highly fragile foundation of flesh and blood. This is where the story takes a very dark turn. That $500 billion, it relies entirely on 11 random millennials, complete strangers, completely unknown to the public. If they die, the clock runs out. The entire system is rigged to a biological countdown, creating a literal ticking time bomb at the very heart of the global economy. So, to understand how we arrived at this terrifying reality, we have to look back at a moment of absolute financial panic. Let's rewind to October 19th, 1987. Black Monday. The market didn't just dip that day, it completely collapsed. Trillions of dollars evaporated in hours. The sheer panic of that crash forced the Securities and Exchange Commission to conduct a desperate 800-page autopsy of the entire financial system. They were frantically searching for a catalyst, some reason for the sudden bloodbath. And what they discovered was a profound structural flaw. The market desperately needed a way to trade diversified baskets of stocks all at once to prevent future volatility. Enter the American Stock Exchange, an underdog fighting for its survival, who stepped up to engineer a solution. The SEC's revelation was actually painfully simple. You just couldn't buy the market. Sure, you could buy stock in a massive corporate conglomerate, or you could buy shares in a random New Jersey deli. But you could not actually invest in the stock market itself as a single tradable entity. You could track the S&P 500 mathematically, but you couldn't own a piece of it. Amex decided to fix this. They wanted to buy all 500 companies, bundle them into a single trust, and sell shares directly to the public. Section 1. The Law Against Forever. Amex immediately collided with a massive legal wall, known as the Rule Against Perpetuities. Now, what's really interesting about this rule is that it's a centuries-old legal doctrine designed specifically to stop dead people from controlling the economy from beyond the grave. And the rule is absolute. Every single financial trust must have a hard, legally binding expiration date. You simply cannot build a trust that lasts forever. The Amex lawyers wanted SPY to exist into infinity, but the law demanded an execution date. Wall Street, however, always finds a way out. They dug deep and discovered a loophole, the flesh and blood loophole. It's an unsettling legal workaround that completely bypassed the restriction. They realized a financial trust doesn't actually have to be tethered to a random, arbitrary date on a calendar. Instead, it can be legally bound to the lifespans of named, living human beings. The specific mechanics of this loophole are brilliant, but terrifying. The trust is pegged to a named life at its exact moment of creation. The catch? The entire $500 billion trust automatically dissolves exactly 21 years after the last named person takes their final breath. This isn't just some obscure Wall Street parlor trick either. It's the exact same legal maneuver the Walt Disney Company recently used in Florida to bypass state control, pegging their corporate reign to the bloodline of King Charles III. Section 2. The Statistical Insurance Policy. The American Stock Exchange quickly realized they couldn't just rely on one person. I mean, think about it. If that one person dies in a tragic car crash tomorrow, the entire fund legally collapses 2 decades later. So the crucial point here is they needed statistical insurance. They ultimately settled on a number, 11. 11 infants to be exact, gathered together to act as the biological collateral for the United States economy. They didn't go to the political elite for this. They didn't seek out the heirs of billionaires. They used what they casually called fresh-baked tots. These were simply the infant children and grandchildren of exchange employees and their personal friends. By naming these specific infants in the core trust document, they effectively anchored a century of global financial stability to their physical longevity. If these babies live to be 80 or 90 years old, the trust safely survives. Section 3. The 11 Strangers Today. Decades have passed since that document was signed. Those babies are adults now, walking among us today. Paul is a bartender in Philadelphia. Elizabeth is an engineer in Atlanta. Emily works in sales in New York. Rianne lives in Alabama. And not too long ago, registered for a kitchen stand mixer. And this brilliantly illustrates the sheer cognitive dissonance of our financial system. A $500 billion macroeconomic pillar rests squarely on the shoulders of ordinary people working mundane, everyday jobs. They hold no corporate board seats, they make absolutely no executive decisions, they literally just have to stay alive. That is their only function in this grand financial experiment. By simply waking up and breathing each day, these ordinary millennials are single-handedly preventing 1% of the U.S. stock market from being legally wiped out of existence. Section 4. A fragile house of cards. Let's move to the end game and see how this builds into an inevitable crisis, because the fundamental question haunting the hidden architects of SPI is this: what happens when the clock finally runs out? What exactly occurs when the last of these 11 strangers passes away and that final 21-year countdown hits zero? The legal contract is absolute. $500 billion will be wiped off the market. The trust dissolves. Now, the corporate suits on Wall Street will tell you not to panic. They blindly assume they can just magically engineer a SPY 2 and smoothly shift all the assets over before the Grim Reaper collects the final debt. But that assumes a perfectly frictionless transfer of $500 billion. It completely ignores how incredibly fragile and duct-taped the modern financial system truly is. It brings us to a chilling realization: the pillars of our society are stranger than you think. That safe, boring stock market that houses your entire retirement, it isn't a flawless mathematical machine. It is an archaic, bizarre compromise built literally on the heartbeats of strangers. The elite and the financial establishment want you to be a docile cog. They want you blindly trusting the system without ever looking under the hood to see the duct tape holding it all together. But now you know the secret. You see the bizarre loopholes actually controlling your future and your wealth. Do not accept the illusion of safety. Investigate the racket for yourself. Take control of your own financial life. And above all else, stay dangerous.